It's been something of a dire year for shareholders in Tesla, and with quarterly earnings due out later this month, are we about to get another shock from the electric car company? Hello, I'm David Jones. I've been a technical analyst in financial markets for the last 25 years, and on this channel, it's a dedicated channel looking at major US stocks and where the opportunities might be. I thought we'd take a look at Tesla. We've got earnings coming up in the next few weeks. What we're going to do in a second, jump on the chart, catch up with what's been going on with the share price. It has been a tough year with the price pretty much halving at one point this year. Then we'll come back, talk a bit more about the fundamentals around Tesla, the big levels to watch, and then go back on the chart and look at things in a bit more detail. As usual, if you're watching and you haven't subscribed, if you could subscribe, support the channel, and we'll continue to push out content like this. But first of all, let's catch up with what's been going on with the Tesla share price this year. So we'll take a quick look at what's been going on with Tesla over the last 12 months. Then we'll go back, talk a bit more about these upcoming earnings, what the year so far has been like, and come back and look at Tesla in a bit more depth. But just in case you need a reminder of the performance, over the long term, if we go back to the beginning of 2013, Tesla shares were trading about $35 a share. And then, of course, by September 2017, they'd got nearly as high as $400 a share. They've been a real pioneer in the electric vehicle market, but clearly their performance, I think, has been somewhat flagging over the year so far. Let's take a quick look at that. So December last year, December 2018, the shares were trading around about 380, and you can see all the way into June we saw this steep slide for the Tesla share price, trading as low as 180. But I think it's what's happened recently that's interesting. We did get that gap lower on these earnings. We'll look at this in a bit more detail in a second, but I'm wondering, are they actually now turning the corner and we can expect further gains? I'll talk a bit more about their earnings now, and we'll come back and look at this in a lot more detail. So the damage to the share price was done in the July earnings. The market was expecting a loss from Tesla, a loss of around about 40 cents a share, but that was exceeded, and not in a good way. We saw Tesla's earnings for the previous quarter coming in, they lost $1.12 a share, and that's where we've seen that big gap on the chart. We'll go back and look at that in a bit more detail in a second. Since then, though, we have had some better news. Just in the last couple of weeks, we've heard that in the third quarter, it was a very good one for Tesla. They delivered 97,000 cars, big number, but unfortunately, market was expecting something like 100,000 to be delivered. So again, we saw a bit of a hit, a small hit on their share price on that disappointment. Tesla earnings are always closely watched, and we usually see plenty of volatility for the stock based on how well it's done over the previous quarter. This time around as well, though, analysts will be watching to see just what is happening and how are things going with their new factory in China. That's a big hope for Tesla in the future, so that part of the earnings is likely to be closely scrutinized. We're going to jump back and have a look at things in a bit more detail and see just where the opportunity may be over and after the earnings. Before we do that, let's just take a look at some of the big levels for the Tesla share price. I think the really big one from recent months is that high just before those disappointing July earnings. That comes in at $266 a share. After that, I think for shorter term traders, it's the most recent major high from September, and that's in at $254. When we start looking at support, that's when things get a bit more interesting. We are seeing something of a recovery going on. The most immediate support, I think the major one, 211, the August lows. After that, it's a really big level, 177 a share. That was hit in June, and it's also the low for the last couple of years. So to find out a bit more about how I think these levels could play out over the next few months, let's take a look at the chart in a bit more detail. So let's look at this decline that saw the price halve since December last year into June of this year. I thought what was interesting is where it stopped. We stopped just on what was a big level from November 2016, around about that $180 a share mark. This is before we saw the shares really ramp up and have a test towards $400. We've seen it turn around again, and I think what has happened during the summer is very interesting for us going into earnings now. So you can see what a great job this trend line did for keeping the Tesla share price down. We'd get rallies along the way, as of course you do, but these ended up being just dead cat bounces. But all this changed in early July. We had the move back to that trend line that had been in place since December last year. The price has broken out. We did have quite a severe gap lower on those earnings in late July. The price closed at 265. Earnings came out and we saw that it gapped lower down to sort of 233 initially, then back to the 210 level. But I do wonder if maybe we're seeing Tesla building a base down here. The share price has been pretty flat since July, trading in this broad sideways range. But clearly we do have an awful lot of support. First of all, ahead of that big level from June, 178, 180 a share. Then after that, the most recent lows coming in around about 210. So there still appears to be an appetite to be a buyer on weakness. So for now, at least, it is holding on to this recovery. So I think, you know, the initial target would be for a run back up to those old highs, up around about 265, just before the last set of earnings came out. The moving average is doing an okay job of sort of supporting the price. Clearly we're seeing it, because the market's been sideways, we're seeing it flip around. If we get some strength through 240, we're above that 20-day moving average again. Not much going off with the RSI because the market's been a bit sideways. Then we're seeing the RSI sideways as well. But assuming this trend is going to hold, first target is for a run, I think, back up to 265. If it can break there, it does suggest there's plenty of momentum behind this price. I think we can start looking for a run back to the 300s. On the downside, of course, because no one's got a crystal ball, you know, I think we have to watch ultimately this big level back from June. I think if we did see a break below 180, again, we would see plenty of longer term Tesla holders deciding to throw in the towel. And I think the risk is then for a much deeper sell-off, you know, perhaps back initially to the 2016 lows around about $140 a share. But now, based on this recovery that's been chugging along for just over 4 months, assuming we don't have a massive shock at the earnings, it doesn't seem too over-optimistic to expect the Tesla price to continue to push higher and recover at least some of this year's losses. That's it for our update on Tesla. They are recovering after those disappointing earnings. We'll see how high they can get. We will, of course, do another update when those earnings have come out and the market's reacted. To never miss out on any of our content, make sure you're subscribed. Click the alarm bell thing down there and you get a notification off YouTube every time we upload new content. But for this update on Tesla, we'll leave things there. Good luck with your trading.